you have a block of 8 diamonds, which to meet a certain standard, you have a huge variety, and I would imagine that's where some computational work comes in to identify and select and then allocate those diamonds into the bars.
That's right. It's all based on statistics. And I like to say Adam Smith and the invisible hand, if you remember The Wealth of Nations. And we don't have an opinion on the price of diamonds. The way your jeweler might look at the diamond and say, oh, this one is such and such, it should be worth X. And that's an opinion. And in finance, opinions are worthless. The only thing that has value is cash on the barrelhead, an actual, what's called an actionable offer, or even better is an actual trade that you have visibility, like on the New York Stock Exchange or the TSX. So using brute force is how we force the market to tell us what is every diamond worth. And very simply, we bid a cash bid on literally every possible type of diamond that we can use. We can use about 94% of diamonds. We can't use tiny little things that are too small to be graded. And we don't use, big giant 3-carat diamonds either. Those are very subjective. But everything in between, whether it's flawless or flawed or D-color or anything in between, we can use. And so we bid on every possible diamond, and we force the market to tell us what's the value by raising our bids until somebody says yes. And what we end up buying is what's called a statistically valid sample. That means we buy a little bit of every different type of diamond, but we actually buy them in the same frequency as what's been found in the earth. So, for example, we always buy D-flawless diamonds, but we don't buy very many. We may buy 100 a week. For diamonds at the other end of the range, smaller KSI2 diamonds, we might buy 4,000.
I see, as a representation of really what is being mined and what is in the market at the time.
And we call that the yield curve. And it's not like a bond where the yield changes with the duration, but it's the literal yield of the earth. What frequency of D color does the earth produce on a regular basis? So every time we buy diamonds, we buy them in proportion that of what the earth has produced historically. And that proportion never changes. It might change in the over future. It's very unlikely. But they might find a new mine that's all flawless diamonds. That could happen, I guess.
Yeah.
But that pattern, that's what our patent is. We have a method through bidding that we buy the same statistical distribution every week. And so the diamonds we buy today, think of it like a pile, and the diamonds we buy in 30 years, the two piles are never identical, right? You can't buy the exact same 10,000 diamonds. But if you analyze what's the percent of D color, what's the percent of flawless, those statistics are always the same forever.
Yes.
So we can prove that every pile is geologically equivalent. And then the last step that you asked about is, okay, you get 8 in a bar. The last step is we had a breakthrough in optimization where we divide that pile so that every bar is also a statistical sample. So every bar has small, medium, and large along that yield curve. It has a distribution of the colors, the clarities, and the carat weights that are optimized. And when we made our first batch, which was $25 million worth, we set a minimum that every bar must have more geology, more carat weight, more color, more clarity than the minimum bar in the first run. And that is the diamond standard. It's that minimum bar of diamonds that must be, of geology that must be contained in every bar.